Remember, I don't like Dogecoin because I don't like the idea of people losing money. But if you can make money trading Dogecoin, more power to you. And I love the dog. I love dogs. I love animals. So I have no problem with Doge and his friends. Let's see, I need to make sure I kill this though so I don't get hit. All right. And then, yeah, as far as topics tonight, I want to talk a little bit about this B-word event, my thoughts on it. It was a little bit, it went different than I expected, I'll be honest. Very different. How's the mining going? The mining's going pretty good. Let me pull up one of my miners for you. I've got them on ultra low power right now. Still working on kind of tweaking. I'll pull up one of them here though. Hope I don't like. All right, here's one of my amp miners. Yeah, so let's not do this one. Let's do this one here. I got different firmware on them. Hive OS, Nice Hash, the stock OS. I'm playing with a bunch of different OSs. I think both these are on Nice Hash or whatever. So here's one of my miners. So I've got them tuned in pretty well. You can see I've got the mining profiles tweaked in for, they're all tuned at the lower settings. And then I've got like a mid setting. The problem is my little shed I have out there, the cooling that I have for it right now. During the day, it's been, 90 plus degrees here in Texas. And I am cooking that shed. The cooling I have, I mean, I redid the cooling to vent as much hot air out of one of the windows as I could. Yeah, I had originally tweaked in for about 63 terahash, but I'm only running right now 38 terahash. I'm running the minimum until I have time to go figure out. It's staying nice and cool, running the minimum 38 terahash. And also, the other problem I'm having is the shed's, it's a pool shed. So my backyard pool, like if I turn it up much more than this, it is so loud. You can hear it through the whole yard. So you can't really hear it in the house, fortunately, but as soon as you step outside, if I have it on any of these higher settings, man, it is just cooking. But yeah, they're miner. Let's see here, miner status. What am I cooking at here? I think I got like, I'm going about 36, 38 terahash right now in ultra low power. The ultra low power is good though because I'm actually getting the highest return possible for watts. So in the long term, this is what will be, a profitable years down the road. This lower power setting. Looks like I got some ASICs that are messing up here. I gotta go check that out. We got a couple of a bank of ASIC errors on that one. Let's do this one here. Yeah, but the problem is a bank of ASIC errors are too. I'll figure that out later. Yeah. So, but when I did my calculations, this is by far I'm only using 1,000 watts on this one and 900 watts on this one, but I'm producing 38 terahash. Now I pull up my calculation for you guys. I don't know if. Oh my goodness, you got to be kidding me. There's a bug running across my screen. There's a big old giant bug. All right, I can't pull up my crypto holdings one. I've got a spreadsheet for mining tweaking. Where'd it go? S17 Pro tuning. I don't want to give away like how much Bitcoin I have or anything. Okay, good. Yeah, so you look at the tweaking. If you look at like my cost per year, what I'm looking at is basically cost per terahash. And so when you look at, let's see here, watts per terahash, how many watts am I using per terahash of that I'm producing? This is the most profitable, in the very long term with expensive electricity. But these are my most profitable profiles right here, right in the middle. The problem is I just don't have the cooling, and I don't have the desire to listen to screaming banshees when I'm in my backyard. So running it on these two settings right here, basically I need to automate it to flip to either this one or this one at night, and then back to this one during the day. So that way when you're out there, you don't hear screaming banshees, and the 90+ degree summer heat doesn't kill them. Or kill my shit. All right. Anyway, that's where I'm at on the mining though. But the mining's going good. I'm ramping up, getting more and more miners going. All right. Have you replaced all the Chinese stuff? I've got 10 S17s I'm trying to get online. 10 S17s I'll produce. If I max them out, I'd be 800 terahash. The way I'll be running them is about 500 terahash. So let's see here. There was I don't know how many how much exahash of Bitcoin mining hash rate. Is this the one I want? This will work. It's not the one I want, but we're at 100 million terahash. So whatever, it's like it's in the exahash is how you actually, it's multiple exahash. I don't like the ones that read them out in terahash. I want exahash. This one reads exahash, perfect. So the Bitcoin mining network now has bounced back to, what are we bouncing around at? 93 exahash. So I don't know what my share of that, but it's a small, tiny fraction. All right. But nonetheless, how much BTC will machine mine a month? You go over here to my tuning. So I'm producing at these medium, I'm producing like 0.17. So if I really cranked them up, say one of these rigs can produce about 2/10 of a Bitcoin a year. So 10 of them, I'm producing two Bitcoin a year at the highest settings, and I'm producing about, really right now, I need to get them tuned in for these settings. So I need to be cranking out about 1.7 Bitcoin a year when I get them all, when I get the cooling and everything else optimized as I can. I want to be running this, at least this profile right here, which is about 1.7 Bitcoin a year for all 10. But, you know, 7/10 of a bit, or 1.17 Bitcoin per miner a year. That's the total revenue. That's not, I mean, obviously electric costs. What I do is I eat the electric costs. I just pay for it out of other cash flow, and I keep all the coins. And then I sell the coins, you know, based on trading. How's it going? Yeah, hey Mindy, good to see you. I went live the other day too, so I pump but I don't dump, Elon. Everything okay? Let's see here. So that's mining. Yeah, you should shoot for 450 CFM per S17, S17 Pro. If you have 10, you probably want 50,000 CFM of exhaust for my research. Yeah. So I was doing some exhaust calculations too. So I'm looking at some industrial fans. So I've got a friend that does woodworking. He's working on building me some custom cabinets right now. So I only have, right now everything I have is like, it's totally ghetto rigged on some plastic, temporary plastic shelves that I got from Home Depot just to get it, kind of start figuring things out. But we're looking at some industrial fans, and an industrial chiller. But I still need an actual air conditioner to remove moisture from the air too. So we're working on like a hybrid system of just a general chiller, commercial chiller, some commercial fans, and then some air conditioning to just max it out. And it's going to have three. So the configuration will be, I'll have 3 miners per bay. And then I'll probably end up buying some S19s or whatever comes available in a few months to fill up. I'll have 12. I'll ultimately have 12 miners in this. So we're going to have four bays tall, 3 miners per bay with commercial fans. So there's going to be a commercial fan and a filter in front of the commercial fan per bay. Is that the commercial fan just blowing air across the miner, and then we're going to suck that out all through the back of the rack to the top, and we're going to have another commercial fan with, you know, the waterproof louvers exiting. So we're looking at the external commercial fan has to be, we're looking at about 60,000 cubic feet per minute of exhaust on that. So something close to what you had said there, I think. And this is all a proof of concept for, we're looking at some land that's way up by a solar mining farm, a solar panel farm that we have in the area here. So I'm looking at trying to park it next to that solar farm, and during the day, and I'm going to have my own solar too capacity. I'm going to try to build out on some land. So during the day, I'm trying to get like 5 to 6 kilowatts hour off of the grid, and then anyway, nobody cares about that stuff. 5,000 CFM. We were looking at like maybe it's 50, maybe it's 6,000 instead of 60,000. I don't know. I have to look at what is my, hold on. I need to get back to talking about what we came to talk about. You got me off on a. Let me look at the fan as I'm looking at. Hold on. They're like warehouse fans. Yeah, here they are, warehouse fans. These compact evaporative coolers. No. What's the one we're looking at? These do, yeah, 6,000 CFM. Yeah, you're right. So these are, we're looking at one that does 12,500 CFM, and just running it at a lower setting. So it just has, it's more to 36-inch industrial fan that does 9,000 to 12,500 CFM. So we'll be pulling 9,000 out. And there's another one. There's a smaller one. It's a 30-inch that does 6,000 to 7,800, and I didn't want to undersize it. I'd rather just wire it to run slower. So, anyway, all right, let's talk about. Yeah, I need to do some videos about it. Right now, I'm still like the shed is so ghetto rigged, y'all. I've got those, what do they call those Tech Shield boards that you install like in your attic. I've got Tech Shield boards around the little temporary shelving that I built to have a consistent airflow, and I've got just like standard fans, ingress with some filters on them, and then a big window fan pulling air out right now. And we're just trying to tweak things right now, but working on it. So hopefully, like I said, hopefully this winter I can find some land and build out a bigger, couple thousand square foot shed. So I have again, my friend that does woodworking, he's going to use it for his woodworking business, and I'm going to park a bunch of miners in this workshop, so we're kind of going in halvesies on it. All right. When the line dips, I dip. I do dips in the gym to maintain my tone. I went to the gym today. All right, mining rig by the river. Yeah, you know what though? Hydropower. Is that not like one of the best? If I could get a river, build a dam, my own hydropower, boom, we'd be set. I need to figure that out. I don't want to get too crazy. Like right now, I'm just don't tell the IRA that the IRS that this is all for tax write-offs. But I'm generating some Bitcoin, but I'm also able to write a bunch of stuff off because of this. All right, my thoughts on the B word thing. Let me kill this music here. So I posted this on Twitter and I got some mixed response. I had Alan P, who we all love and respect, saying basically when you question Elon's intelligence, you're probably on the wrong side of the trade. But I thought this was too funny, and I'm not trying to question Elon's intelligence. I get he's super smart, but he's a really busy man, and I don't think that he has the time to really understand crypto and Bitcoin as well as maybe he might probably like. He's just a super busy dude. But when he puts his mind to it, I'm sure we'll get some great ideas and some thoughts. But he's so busy building. They are just coming out of they're still in production hell, as he would call it, at Tesla on the Cybertruck right now, right? That's their make or break. So he's got to get that working. And he's still in the middle of all kinds of stuff with SpaceX. I can't imagine that he really has time to spend much time thinking about crypto other than, he likes having fun with it. He understands it well enough to know it's important. He owns a lot of Bitcoin, so he's got that figured out. He's obviously smart enough to figure all that out. But this was too funny. I'm gonna see here, make sure my audio is back on here. I just love this. That Altcoin Daily posted this. I don't know who originally came up with this, but this is just, I can't do full screen, but y'all can, let me know if y'all can hear this.
Has it ever occurred to you that instead of running around blaming me, given the nature of all this new shit, this could be a lot more complex. I mean, it might not be just such a simple,
What in God's holy name are you blathering about?
That is too funny. So here we go. Listen to this. This is literally,
average connectivity improves, obviously.
One idea would be to to put a Bitcoin full node in Starlink terminals. That way more people would be running.
Actually, I have run this by the team at one point. I had this idea, which is kind of off the wall, but let's say you need a little space heater, and normally your space heater would just be pure entropy. But what if that space heater was also a Bitcoin, Ethereum, Doge mining node? Pick your currency, and so then you'd be heated up, and you would also mine your crypto, and have connectivity in one.
I love that idea.
Yeah, I mean, better than running a space heater.
Absolutely. Are there any other, so you're drawn to Dogecoin a little bit. Are there any other gaps in Bitcoin that you see that cause you to be drawn towards?
I love this. Their faces is so funny coming up. Jack's face is priceless.
I think there's Doge has the Doge community, I think, is somewhat irreverent, obviously, and has great memes and loves dogs, and I love dogs and memes, and it doesn't take itself too seriously, I think there's Occam's razor, which is the simplest answer is the most likely. It's a summary of Occam's razor. The simplest answer is the most likely one. Then there's a friend of mine came up with a variant on that the most ironic outcome is the most likely one. And then I have a variant on that, which is the most entertaining outcome is the most likely one. So if that is true, then the most ironic and entertaining outcome would be that the cryptocurrency that was started as a joke to make fun of cryptocurrencies ends up being the leading cryptocurrency. That would be the most ironic outcome. Yeah.
Jack, what are your thoughts on that?
All right, I gotta go back to the block size thing.
From when
this is from
Tesla
Jordan.
announced that it had acquired Bitcoin and was doing so all I did was I said, look, we're going to suspend linking and
I gotta find
a single layer network where the exchanges act out.
This is the best part.
And obviously it's a Neuralink and Boring Company, but it's not a case of.
All right, we're done with the rambling. But the block size thing where he goes on about kind of like pseudo block size argument. That's beating a dead horse there, but it's quite entertaining nonetheless. This is more entertaining than listening to. I just love this. And so yeah, I'm not doubting his intellect. I'm just doubting that he's got time to mess with this. But nonetheless, all right. Kathy seems pissed. Well, yeah. I mean, Jack's face was just like, dude, what? He's just like, I don't know what you're talking about anymore, or why we're going down this path. Nonetheless, let's talk about. Let me turn on some music. That's why I'm like, why am I my usual. So, oh, I can't. No! YouTube's gonna ding me now. Sue me for. I'm listening to Blinding Lights of the Weekend here, if y'all can't tell. All right, so back to working on our charts here. So my thoughts on all that, ultimately there was some positive things that came out of that, right? Elon himself disclosed that he owns mostly Bitcoin and then a small amount of Ethereum and Doge. I think I've heard him say that before, but he just kind of more or less affirmed that. The biggest revelation, obviously, was that Tesla obviously owns Bitcoin. They haven't sold anything. So he confirmed that. People have been wondering that for a while. This is the first time I've heard him confirm it in a little bit. Again, I mean, he's more or less confirmed it on Twitter, but it's the first time I've heard him say it. And then obviously the big revelation is SpaceX. Not a big surprise. I mean, if Tesla bought, he might just, Tesla, they had to disclose as a public company. He probably just bought some for SpaceX at the same time. So, but SpaceX also has Bitcoin. Ultimately, probably the most revealing thing in all of that was, when Elon put on his business cap and talked about their operations in Europe, their bank accounts in Europe have negative interest rates. They're literally charging him to park money on their fake, bank ledger, right? It'd be like if the Bitcoin network just siphoned off, Bitcoins from you to pay the miners or something. While it's sitting idly in your wallet. So that was kind of a, I don't really think that I knew. I didn't know that in Europe bank accounts were, negative interest rate. That's pretty interesting that the money is literally being drained out of their accounts. That's pretty wild. So not only on one side are central banks printing money out of thin air, thus obviously devaluing all the fiat currency that's out there, but on the other side, they're siphoning out of bank accounts, and it's just like wild, right? What's this world come to? So, I liked it when he asked Jack about accepting Bitcoin for ads on Twitter. I think I might have missed that part. So I have to go back and see what was that. So Nick, what was the result? What did Jack say about asking if they'd accept Bitcoin for ads on Twitter? So yeah, and let's get one thing clear with any network. So you see this with Ethereum. There's all these scaling solutions, right? So before Ethereum 2.0 goes live, you've got roll-ups and side chains. And even after Ethereum 2.0, I personally still believe that you're still going to need external like roll-ups and side chains for different use cases. I get that the sharded network should scale pretty well, being able to break that up. But I think there's the ability to abstract certain parts of a transaction and then only roll up the relevant parts of the transaction to the chain and be able to do a lot of the functions off-chain. You know, that's going to be critical to scaling any crypto decentralized solution. And the trade-off is, of course, that when you have a layer 2 scaling, normally layer 2 scaling solutions are trading off some sort of decentralization for it's a form of centralization that they have to be able to operate as fast as they do. But the thing is, it's still secured by the base ledger, which is obviously a decentralized base ledger. So as long as the base ledger is decentralized, then the functions that exist outside of them, it's not as important if they're decentralized or not, right? There are some applications that you want the application itself to be decentralized, and then you would want to run that more on a base layer, layer 1 type of network. Obviously, you know, I'm a big fan of Cardano, and the way Cardano does it is it's a bunch of side chains that are just it's a side chain orchestrator, right? So it's an orchestrator that orchestrates a bunch of side chains. So it's proof of stake, so it operates a little bit faster as far as transactions than proof of work networks today, and it orchestrates everything through a bunch of side chains. But side chains are a type of scaling solution where you can distribute load. It's like sharding, you know, having multiple side chains with orchestration. It's very similar in concept to how sharding works. You're breaking up the ledger into a bunch of small pieces. You're having a bunch of small pieces do their components and then roll it up, and everybody come to a consensus on multiple components of that, right? So there's a couple ways of doing that. No matter what, we're going to need, though, these layer 2 scaling solutions. So the whole debate about, you know, making this layer 1 and like, I don't care if they increase the size of they move Dogecoin to proof of stake, and they increase the size of the they do every trick in the book to make Dogecoin actually process, say, 1,000 transactions per second. When it comes to especially applications, they can in theory be infinitely complex. And so if you have infinite complexity, you can't solve infinite complexity on a finite set of resources, right? So you need an infinite set of resources to solve an infinitely scalable problem. And so that's just a very broad way of saying that no matter what, with a finite amount of resources that you have for a single core layer 1 protocol, you can't solve every problem. So in order to solve the potentially exponential problems that we're going to want to try to solve with decentralized finance and app, the thing is, you know, people are so focused on DeFi as well. Like, okay, DeFi, NFTs, that's all cool stuff. The other thing that I don't know people have really thought through is when you have a fully decentralized base ledger, and Bitcoin in governance is far more decentralized than any other crypto. When there was all the mining in China, Bitcoin was arguably less decentralized mechanically than Ethereum or Cardano or Polkadot or Tezos or whatever. But now that the Bitcoin miners have been kicked out of China, you'd be hard pressed to make the argument that Bitcoin is more centralized even mechanically than these other chains. You know, so mechanically, very technically, Cardano, Polkadot, and Tezos are probably the most decentralized, but that's neither here nor there. The reality is Bitcoin is far more decentralized. That's just reality. So if you take Bitcoin's base ledger, the base layer, and you have this highly decentralized, you know, very scalable, I mean, not very scalable, very resilient and robust base layer, you're going to have an infinite world of complexity when you have that base layer, that capability, you can build new things that have never been thought of before. And so this is the other part of it. As you know, Elon's argument with the whole block says, if y'all didn't quite get what he was saying, I know it's kind of like, it sounds kind of ethereal. What he's really saying is, look, I think with advancements in technology, with increased bandwidth, with the exponential compute power that's going on and everything else, right, Moore's law, so forth and so on, and namely, I think he's forgetting the storage piece. The storage piece is a bigger component of this, but he's talking about bandwidth. But nonetheless, he's thinking that with a decentralized, if you have all the computers in a network that are doing the same, work to validate transactions and come to a consensus, his argument fundamentally is that with advancements in technology, you could scale the base layer so much that it should be able to handle a high volume of transactions for like a cashless payment system. But what he's not taking into account is, what they're doing with smart contracts built on top of Bitcoin, or obviously Ethereum has smart contracts natively, right, in the protocol and scaling there. When you have this decentralized base ledger, you can build applications that are not possible to be built on a centralized ledger. There are certain things that it creates a new paradigm for. And, VeChains may be a really good simplistic example of this, with the ability to build a decentralized supply chain applications, right? If you want a truly decentralized supply chain application, you have to build it on a decentralized base network, right? So, all that said, what Elon is missing is outside of the cashless payment system and making money more accessible to people, which is where he's coming from. He's coming from, let's make money, the base layer, the base ledger for money, less error prone, which means there's less error and there's less interference, really, is what he's getting at. The interference comes from external entities, governments printing money, so forth and so on. And then people have the value, their time and energy when they lock that in as a transaction, that the cumulative effort, their energy doesn't get devalued over time. That's fundamentally what he's talking about. And so you could, in theory, build a base layer, a base technology that can allow that cashless payment system and that store of value kind of network in one base layer. But what he's missing is, because of this exponential increase in compute power, bandwidth, and everything else, there are not only new applications, AI, cloud, whatever, but the blockchain itself enables new applications. And so there's a problem with exponentially increasing compute power and bandwidth and so forth. There's also exponential increase in complexity of applications and transactions. So now you've got all these, IP-enabled endpoints, IoT, whatever you want to call it, that are now capable of doing microtransactions, that need microtransactions. They need to be able to conduct microtransactions because as they're going to be interfacing with each other, and this creates a whole new ecosystem. And so, as bandwidth and compute power increases, so do applications and complexity, and then the endpoints that are actually involved in this network. All that said, no matter what, you have an exponentiation problem. So if you exponentially increase compute power and bandwidth, then you can exponentially also, in theory, increase the base layer of a decentralized protocol and increase its transaction capabilities. But when what you're fighting against, the headwinds you're fighting against, is that the whole IT framework and internet framework is also exponentially increasing and becoming exponentially more complex. Think of, again, what they're trying to do with a full self-driving cars and AI. Imagine, your full self-driving car, it's going to need access to certain types of sensors and roadways, and there's going to be all kinds of special infrastructure built for this. Those cars are going to need to communicate with municipalities, right? So before long, cities are going to have dedicated highways that are full self-driving highways, right? And they're probably going to want to monetize that somehow. So there's going to be some interaction between the AI car and the sensors and whatever else that they require that the car hook into to be able to drive on these full self-driving vehicle, level 5 roadways. And so there's going to be a bunch of microtransactions, and Elon should understand this. Well, this is his space, and he understands that part of it obviously better than I do. But you're going to have this exponential explosion of microtransactions, and if you're going to try to normalize all of that on a fair base decentralized monetary system, you're going to have a scaling solution, just because bandwidth and compute power is increasing, and you can, in theory, increase the base layer. The problem is you're also going to exponentially increase the necessity of transactions as interconnectivity becomes more complex and as applications become more complex. So anyway, it's my long way of saying that I think he's missing that's the piece that he's missing, that no matter what, we're going to need layers of abstraction to where you can do certain maybe microtransactions as well as applications off chain and then roll up the base transaction that needs to happen as a result of whatever work was done to a base layer. And then in the case of like micropayments, for example, obviously I don't care how much they want to work on Dogecoin or Ethereum sharding or Cardano or Bitcoin. None of them are going to be able to handle, hundreds of thousands of micro transactions per second that need to be done basically free. But you can probably get something done like that on a layer 2 network that's purpose built for something like that. And so, or even a separate network that's purpose built. So like an IOTA or, not Neo, what's the word I'm looking for? Nano, right? These other, or HBAR or something, right? These other, but you could offload that work to those type of either purpose built applications and chains or a layer 2 or whatever you want to call it. And then have a roll up of those transactions that's a very small fraction of the actual transaction volume. So that's the piece I think he's missing. And I think no matter what, we're going to need layers of abstraction. So to that point, I'm obviously I understand Ethereum well enough from a technology perspective. I totally get the use case for it, and I love it. I love Ethereum. I love Cardano. I love Chainlink. I like Polkadot. I like the scaling solutions, Matic and Loopring, and a bunch of other projects. Outrun. There's a ton of projects I think are really cool, doing a lot of cool things. But nobody, the other piece is nobody can replace the importance of how the nature in which Bitcoin came into existence and came into the world. They talk about it, Kathy talked about it, right? You can't replace that. And the fact that it's truly headless and truly decentralized, it makes sense for that to continue to be the reserve currency of this new crypto ecosphere landscape, and also the reserve currency of any new monetary system. So if you're really honestly trying to compete with gold or fiat currencies on a global scale and you want a truly decentralized monetary base, the Bitcoin base ledger is by far the best for that. So then it's just a matter of, if you're going to use Bitcoin as the base layer, the reserve currency for all of crypto, and you're going to use it for the reserve currency for all of the crypto applications that are built on top of it, and then some countries are adopting it, right? So let's just assume that not every country adopts it. Let's just assume that just some countries adopt it. Having layers of abstraction on top of that base layer to where we can do microtransactions with Lightning, or we can do smart contracts, through oracles or through second layers, right? All these things are going to be critical because that base layer makes all the sense in the world. And Ethereum has its place and Cardano have their place, but they're not able to repeat the nature in which Bitcoin came to life, the network effects it has, and the true decentralization that it has. So long-winded explanation, but I think he's missing the boat on a couple of points there. All right, got to get that stimulus money. Let's look at the charts though now. All right. So I missed this opportunity to buy down here. I'll be honest with you guys. The risk reward. So I tried to buy right here. You probably saw me post on Twitter. I'll be honest. I had a swing and a miss here. I saw it coming into 31.3, 31.4, and I had a daily. Let me just show you this. Let me delete all my Heath levels off of here, and I want to walk you through. We're going to talk a little bit about Heath levels and how I use them. Okay, I'm just going to delete all my Heath levels off this chart. We'll just start fresh. All right, the 2020 open price. That's a pretty standard, right? And then this is January weekly. So if I go to the weekly chart, this to me has been a super critical level. You see that weekly close right there? That's the weekly low close. So once we broke up here, January, this weekly opened here. So January 4th. So this was, I guess, a long weekend, right? So I guess January, whatever. The weekly opened here and closed there, and then it got pushed down, and it came into this built new support. When it came in here, this red bearish candle was stopped here. The bulls regained momentum and really regained momentum, pushed back the other way. When that happens, when you have a shift from one candle to the next, when the bears or the bulls, one side or the other loses momentum and the other side takes over momentum, that's a change in trajectory. That's a key level. And so basically, and I know Heath, there's a lot more nuance to how Heath does this than Ada is my main hold. Nice. So when you have that change in the market, right? When bulls have taken over momentum, that closing price and the opening price of the next bar, when it reverses and then it has a continuation on that reversal, that's a super important level. Price almost always interacts with that. So you can draw those lines. The weekly levels are great to keep an eye on, and I should probably throw some weeklies on here. What I do with weekly levels is I actually draw them in as horizontals. This is the January daily close high. Right here, this is actually a weekly level. It's a little bit off. But you see that C change right there? So what happened here, we had a big bullish push. Bears took over, and then the bulls regained momentum right here. So that's a support level. Important support level. Now that was lost over here. When that was lost, that was broken. So this is no longer a super important level. So we can probably remove that. I'll move it up here. That's the next important level. Now we've got a lot of weekly activity. So right here, we had these couple of really bearish red weekly candles right here, right? And then the bulls regained some momentum. The bulls took over, so it's 3 green weekly candles in June, actually, right? So we had this big red bearish push and then three green candles. So this, where the bulls took over, is an important level, 34,800 roughly, right? And they reversed, but then the bears regained control, and they closed the week at 39,100, and then they regained control. And then we had a small bullish attempt here, so that's going to be a level to keep it on. I'm not going to put a line on it right now; it's not super important. But you see here the same support, the same level that was built right here on this initial sell-off, and then a attempt at a reversal. You know, a little bit of a dead cat bounce here. That's where this weekly found support here and here, and then it broke here. This weekly broke that support, and so that's a really good indication when you close below it, you're heading probably lower. Not always. You have some time to try to recover that to be a fake move. But this case right here, when this broke below, that's a strong indication. So all of this is now resistance. And I said in a tweet somewhere along the way, I said there's so much overhead resistance that you shouldn't feel in a rush to get back in, because what's going to happen is you're going to hit these resistance levels and you're going to form a bunch of CTM entries exiting on the way out of here. So you'll have plenty of opportunities to take a good CTM entry pretty close. You know, you're not going to catch the bottom, but you're never going to catch the bottom. That's the thing, is that trading is not a game of catching the bottom wick and the top wick. It's catching the move, right? The game is this. You want to catch this move. So you want to see the trajectory changing. You want to get in here, ride this, and see the trajectory changing and get out there. So if you can get in here and get out there, that's what you want to capture. You're not trying to capture this low wick and that high, because if you try to do that, you're going to end up buying and selling all over the place and just getting destroyed by the market. Your job is to catch once you see the trend continue, and then when you lose the trend. In here, out there, capture that sweet spot of the move. That's the game. So over here, what we're trying to do right now is we're trying to do the same thing. We're trying to capture the move, the bounce off of here. And we want to get in as low as we can, but there's no point in stressing about trying to catch this wick low. And if you can, great. You know, the Heath levels, this is where Heath levels come into play, right? Heath levels are wonderful for attempting to catch these bounces and having a piece of that move. You know, I don't put these are like little 10%, you know, sized orders, just a small order trying to capture this with a super tight stop loss. Like, it's about 1/10% risk for me when I do these, right? I'm not even doing a 1% risk trade. This is just like 1/10%. I'll throw an order here, see if I can't catch a nice reversal. All right, so back to the point of Heath levels. So, you know, again, really think about the fact that what we're trying to do is we're trying to catch the sweet spot of the move, but we can try to scalp. We can try to catch the wicks using Heath levels, and then so let's go back to the daily here. And if you don't know who Heath is, Heath Trade Talk, go to my YouTube page. I've got 2 suggested pages. I've got Jordan Conquer the Markets and Heath Trade Talk, right? Recommended. Smash the likes. Oh yes, thanks for the likes. If you're probably, most people are probably gonna be watching this tomorrow. You know, tonight's kind of late, but I'm recording this, so people are gonna might take a look at it tomorrow. So if y'all could smash the like, I'd appreciate it. All right, but I'm also, you guys can tell I'm not as active when trading isn't hot. I'm not here to build a huge following. I'm here to share my thoughts on the market when there's something to share. When there's not much to share, there's not much to talk about. So I'm not going to press to do a whole lot of videos. Now it's getting interesting. Now I think we're in for some move of a bounce here. Back to Heath levels. All right. So think about that. Just simplifying it all the way down. When you have bulls in charge and the bears take over, whatever that closing price was and then the reversal of that closing price, that's an important level, and the reverse is true. So on here, let's go to a fresh chart. Let me just go to the daily on a fresh. I'll try to find some clean chart here. A perfectly clean chart, currency.com. I don't even know who these people are. All right, so let's just go find some Heath levels, right? All right, so back right where we're at right now. See this daily this daily level closed right here, and the bulls retook momentum. We had one green daily so far. Hopefully tomorrow's green. It might not be. It might be red. Put a little more resistance here. It's okay. That gives us some CTM entries to work with as well. But this level right here. So the bulls from the 17th, the bears were in charge from the 17th, 18th, 19th, and 20th. They got 4 days of consistently lower closing prices from the opening price. So the bears were in charge here, and then the bulls took over. Yesterday now on the chart today, but yesterday on the chart, right? So what we're gonna do is we're gonna put a Heath level right there, right? So that's where, and I just use daily. Heath has way more advanced ways of doing this. This is how I use his levels. I just go to the daily chart and I throw the levels on the daily. All right, so that was a big reverse. That's an important Heath level. Now the market tried to reverse right here. We had one green candle and then it continued down. So this is going to act as a little bit of resistance / support right here. But we're not going to put that on the chart for now. I'm just going to focus on the bigger moves. So we had 2 red days and then an attempt at a green and then a red day. So the way I'm going to do this one is I'm going to start right here. This is going to be resistance where the bears took over. The bears had enough of that 1 day of trying to reverse and they took back over. Same thing really kind of here. I would actually draw this resistance, now support, at the bottom of this candle. A little bit of nuance there. But this is where the bulls failed. So this is the level right here the bulls tried, this 31.6, and they failed. This one was, this is the same general thing. So you could draw it there. The reason on this particular one, I'm going to personally draw it here. If you just look at, think of it as liquidity. You see that this day was an indecision day, right? The candle was a tiny body, mostly wick, right? That's an indecision day. So that means that whatever this level is actually right here, this zone was a huge fight, and then the zone continued through here. So this is a zone that's a big fight, right? So we had 3 days of small bodies. Large wicks. Small bodies, large wicks. So this is a battle zone right here. So I'm going to draw my level as close to the median of that. And so you see what happened here. The daily closed barely above it, and then we came back and wicked right to it. I'm going to go down to the 1 hour. So these lines, these are fresh lines I just drew, right? When you see how the price interacted with that, it hit this line that we drew earlier perfectly. And I didn't know I was going to do this in the 1 hour. Perfect. So it hit this line perfectly, came back to this level, went down a little bit below it, and then found support here. And now we're working on finding some support there. Okay. So let's go back over here now. Let's see. So that I picked the top of this one. I picked the bottom of this one. You'll see why I picked those 2 levels. I picked this level here. Now over here, same thing. You can kind of see here, if you draw this all the way back over here, this is interesting to me when you have a confluence, right? So I had a big bearish candle, a lot of body. Bears have strong momentum, but then the bulls, a decent amount of body on this. The ratio of the wick to the body also tells you quite a bit about what's going on with price action, right? So, but the bulls did retake, and the bears technically got. This is a really weird wick. Like, these dailies look totally weird on this chart. Let's go to Gemini. Let me go for a different feed here. This is like irritating. These shouldn't look like this, right? These big like the close price on this candle should line up to the open price over there. It's just super weird. Sorry, this music that I got on is distracting. All right, so but using this, I'm going to ignore this right here personally, because the problem is that this bullish candle was taken back out by a bearish momentum over here. And I kind of counted the bulls got up to here before the market reversed on them. So this is where the bulls were able to push up to, and then the bears regained. Now again, these wicks aren't lining up. I don't like this chart now that I'm working on this. These levels up here are getting to be a little bit less important. Same thing here, right? A bullish attempt, and a bullish attempt. So all those are going to be resistance. Now you can go back in time. You can see like the problem is that these are now going to be invalidated. Like because this big red candle blew through here. This is not valid anymore. This is not the most. This is we've had price action cut through these levels. These levels we don't need to go back to. We only need to go back to fresh levels. So if I keep going on this chart, here's all your Heath levels that I use. Now Heath would probably tell me I'm doing something wrong here, but these are the important ones that I see. And look. I love doing this confluence thing. I'll drag this over here, just try to get a little more high fidelity on that, right? So this is what I mean, but there's a ton of resistance. So what's going to happen is we're just going to ping pong between these on the way out of here. Even if we do it pretty fast, you're still going to get a lot of this activity. So you're going to get lots of CTM entries. So you can pick your level, pick your spot, and say, okay, I'm now comfortable that we're in a reversal pattern, and to take your CTM entry. Really, you get outside this, like so. This is the pattern. If you're doing a pattern trading, this is pattern trading, right? This is not price action trading anymore. This is now what I'm drawing is this pattern on here. What Heath does is price action trading. He trades the interaction of price as it ping pongs around these type of levels. I do layer in patterns and trend lines. I also use SMAs and fib levels. So I kind of a multi-hybrid, but I use Heath levels now. Obviously, the other thing too to keep in mind is if you Jordan taught a lot of people in the community how to do support and resistance using the 8-hour chart. And the 8 hour is great. So what he's doing though, when you go find those levels, like you see a bunch of price action, you find your wicks and you draw your horizontal support and resistance, they're going to line up really close normally with Heath levels because that's probably areas that the market has interacted with a lot. The advantage of using Heath levels is you get the most recent, right? So the only problem with longer term trend lines is that this price action over here is no longer as valid as this right here is far more valid than this stuff over here for the most part, right? As long as because we've cut through all this multiple times. We've gone up and down, up and down, up and down. So, what happened over here is not really that relevant because we've cut back through it and back up and down all through here. What really matters is what just happened. That's what the market's going to pay the most attention to. And I noticed when I started using Heath levels like this, and I just use the dailies. I don't typically go try to find Heath levels on the 4 hour. I don't care. These levels I have plenty of levels to work with just looking at the dailies, right? That's how I do it. It's my opinion, not financial advice. But you can see again, go to a really low time frame, and I just do this trend line through here. We're fighting with that trend line. We found support. This is like a mini wedge that we're trying to, a little flag, very short duration bull flag that we're currently testing with right now. All right, let's go back to questions. Try Bitstamp. Yeah, I've got a bajillion feeds, man. I got KuCoin, Bitstamp, Binance. Let's go do the same thing on the Binance feed real fast. I know they get a pretty good feed, right? They're pretty high volume. See, look at this gap right here. Never mind. I just said that. It's stupid. KuCoin's feed. Whose feed do I like right now? All right, you said I got a Coinbase feed up. Oh, hold on. BTC USD, and you said Bitstamp. Let's try Bitstamp's feed. Bitstamp. I already have them up. Let's just go find there. Oh, it's down at the bottom here. Here's the Bitstamp. Oh, this is all my Bitstamp feed has all my trading history on it. Keep track of all this. All right, that's gonna mess up my Bitstamp feed. I think you get the idea. I hope you guys get the idea. I'm gonna look at questions. Does anybody have any questions on what we're talking about? Does something not make sense? Let's try the KuCoin feed. I'm just gonna run through the KuCoin feed. Same exact exercise here real fast one more time. Okay. So we're gonna start over here on the left side. All right, you see this here? We had a big sell-off, and then we got a bounce by the bulls, and then the bulls got stamped back down right there. And look at that. The same exact level that the daily close And I'll tell you guys, the most important levels to me are the daily close and open prices. In all of my charting, the most important level to me is daily close and opens. You can find stuff on the 8-hour, 12-hour, 4-hour, whatever. And you can look at weeklies. Weeklies supersede normally dailies, but weeklies supersede the daily levels as we come into the weekly close more so than through the week, right? So once a weekly is rolled over, Monday, Tuesday, the dailies typically are far more important of levels. The weekly comes into impact a little bit later. But nonetheless, the dailies are what I really watch, right, for my actual everyday trading. But so this is going to be key resistance, 40,500. We've had two daily closes and opens with reversals. Bullish push got rejected twice at that level. We don't need to look at these levels over here. I don't need to worry about these because these failed below that level. So price action has invalidated these tops here. Now they're probably going to be mildly important levels as we come up into this level, and it's something to keep an eye on. But to me, it's not as critical of a level to keep an eye on at this point in time. Right? Right now we're down here. All right. The next important level is this. We got a little bit of a bounce here. Again, invalidated because we got a higher bounce over here. So, because this bounce, a bullish attempt here, was lower than this larger bullish attempt here, I'm going to ignore this one and not draw a level on that. Okay. So, I personally, and then Heath is probably, I really hope Heath watches this part of the video and comes and tells me I'm an idiot and explains why, because if he tells me I'm an idiot and explains why, then I'll get even better. We all will. All right. But this is the bullish push, right? So big sell-off. Bulls tried here. They got rejected here. So this is going to be interesting to see if something lines up over there. But ultimately, all this price action, the bulls tried to push up into here, 35.9, and got rejected. And what's interesting is we had a wick high on this candle right there. All right. The next level that comes into play is bears took control. Bulls, we got a bounce here and then a reversal. This next level, I don't know that this one's going to matter much. And the reason I say that is we had a bearish pushback through, bullish pushback above, bearish close right at, bullish open right there, and a bullish close right there. All right. So the next level I see is this one. This is probably a level to keep an eye on. The problem is the price is going to cut through. So if I look at ultimately, price is probably going to move through 34.5 a lot faster because this bearish candle completely took out that what we would call a Heath level right there. It is still going to be probably valid resistance. I think this particular level, if you go back in time enough, see that close back there. There's been a lot of price action through there, so that is going to be a resistance to watch. It doesn't count as a Heath level in my book or how I would use them, but I'm going to include that level because I see so many daily closings and openings right around that number that I'm going to go actually at the top. Check this out. Go to the top of that bearish candle, bottom here, close. There's a bunch of opens and closes right on that level. So I'm going to keep that one on my chart. This attempt at a reversal here is exactly what we touched just now. Our next level of support is going to be this right here, which is what we touched as well. And then this is going to be a little bit of support, right? This change, 2 days. So two big bullish days, two big bearish days, two small bullish days. These two big bearish days and this reversal down here is your final line. Now, and you're trying to catch. So for right now, I will say this: we know we're wrong if we take out this level on scalp plays or swing trades. Likely, it's still possible that we wick down below this and just bounce again. If we bounce again, it's just more confirmation that this ultimate support level is going to hold. But for trades, you have to get out of the trade here because what very well could happen is if you get price action below this, especially a daily close below this, look at all this air void down here. There's nothing. There's nothing for a long time. And let's go back over here in time. Here's our last levels to watch. All right. A lot of bullish push. One day the bears tried to push lower and then the bulls took control. So what I'm not 100% certain is if Heath would say to draw the Heath line at the top of this or the bottom. I'm going to draw at the bottom. And the reason is to me this is the level the bears tried, and then the bulls took back over, right? So that's 26,261. This area right here, bulls, we got the bulls capped the closing 3 days at that level and tried to push it back down, but couldn't ultimately. But they got that level at several days. That's 23,825. That's going to provide some reasonable support now. And then this attempt at a bullish push, and the bearish push, and the bulls took over. 22. So this zone right here is what I'm really looking at. If we break down, I think everybody's and their mother is going to be screaming for a retest of the prior all-time high at 19.7, and I think they're probably not going to get it. The market likes to do stuff like that. I think this support level will probably be what holds. An example of that, let me just walk that through. An example that's this right here. We were all looking for the weekly low right here, this weekly low wick. And of course, that could still come into play. This is not necessarily a Heath level as far as drawn on the bodies, the closing open price, but it's a significant level. This is the lowest price that we've been for 2021. 29,774 roughly, whatever I have it there. So today, or last night, when we had these bearish closes, a lot of us, and I'm going to draw another like wick low right here, level, whatever, right? A lot of us were looking for, you know, a test of either this 28.8 level or down to the 27.5 level. At that time, when I tried, let me go to the 4 hour, I tried to buy on this is a pretty significant level here that's not a daily Heath level per se. Actually, it might have been, hold on. No, I tried to buy on 30,400. Yeah, that wasn't a Heath level. What it was is a fib level. So I tried to buy right here. This is a fib level that could have held, not Heath level. It was just a fib level. I tried to buy on this fib level here, thinking that we could get an early bounce, right? I'll put in a higher low and then get a bounce. And so I bought here, and I got stopped at break even. And so for me, the risk reward, I'm not going to just randomly buy between support where this thing just decided to reverse out of nowhere that I can tell. Like I couldn't find a really good, you know, probably over here there was something that would have told us. But it wasn't, to me, the risk reward just wasn't there at those levels. The risk reward is either coming in at this level and try to scalp. So I was going to try a little scalp right here with a super tight stop just under it. And if I didn't get an immediate bounce, then, you know, as it rolled over, most likely it would have hit that and bounced, and then I'd be able to move my stop loss up to break even. So that's what I do when I scalp these. You know you're going to get a bounce, so I just move my stop loss up, and either it explodes out and I got me a piece of the bottom, or it rolls over and I get up. That's exactly what happened here at this, right? So I tried to buy at 31.4. I bought at 31.4. I had my stop at 31.3. It bounced immediately. And it just started to roll over. So when it hit resistance and started to roll over, I moved my stop loss up to break even, and it sliced right through it. It's a free trade, got out at break even. I probably actually lost a little bit because of exchange trading fees, but. And I was going to try the same thing here, right? Okay, this 28.8 level roughly is a good level to try that at. This wick low over here, that wick low, whatever, whichever one you draw it at. So 28.9 is what I was trying to buy. 28.9. We never got down there. I would have had a 28.9 buy. And I would have had a 28.7 stop loss. And either it was just going to slam right through there. I was going to take a small loss, and I'll try again over here at 27.5. But 9 times out of 10, it hits this level, it has a little bounce. You have the opportunity to move this stop loss up to break even. And either this explodes out of here, and you caught the bottom, or it rolls over and it continues down, and you try it again, right? That was my strategy on those using those heated levels to try to catch these bottom bounces. If we do roll over now, but this is an example, right? So this went on a tangent. I'm sorry, I do this. This price action here is an example of catching bulls and bears alike off guard. Somebody put in a floor right around 29.6. If you guys get on Twitter, and you'll see Gus from Truth Capital was all over this. He said, "Look, guys, somebody's buying here. I haven't seen a solid floor like this in a while." And he took an entry right here. He saw that. I didn't like these wicks below it, and so I thought it was some lonely, you know, reasonably sized whale that just decided they wanted to load up at that price for no reason. And I thought they were just going to get, you know, crushed whenever they lost, whenever they lost their buying power. But it reversed on us, right? So this is probably, he probably had some friends that I wasn't accounting for. But these wicks below, whatever that level was, is what got me to not try this. So, but I would have tried to buy here. This is an example of, again, everybody's watching this level and the market just doesn't quite get there. Another example of that, just keep in mind this happens all the time. Over here, if you guys remember, there was a CME gap somewhere right in here. I think the CME gap was basically like right here. And for weeks, everybody was screaming the CME's gap's going to close and then we're going to go down to $3 or whatever crazy people were saying. And so everybody kept waiting for it. And so people were shorting this. And look what happened to them. they got wrecked as you came out of this. So, you know, when you're trying to bottom through these bottom scalps, it's really, really, really tough to try to catch these bottom wicks because a lot of times the market reverses when you don't expect it. And sometimes it does. It bounces off of a Heath level and just snaps out of there and you get yourself a great entry. But it normally doesn't. Normally the safe play is to draw yourself, you know, look at the patterns that are unfolding and you take the exit out of the pattern. That's the closest way I can get in and out. Let me go another example for you guys. I know a lot of you know that I got out at Ethereum and Cardano, like the tip top, right? So I've been trading Ethereum pretty well. We were doing really good trading this in and out for the most part. But when Ethereum just launched, this like mega launch over here, I was looking at the 4 hours, sorry. I didn't catch the very top, but I got really close, right? So I put on this parabolic trend line. And boom, this was this was just as textbook as it comes. So that's why I use this one as an example. Sorry, I'm really not trying to brag. It's just a really good example of this. It doesn't always work out this well. That's the other piece to keep in mind. It doesn't always work out like this. But look how perfect that was. We had this huge launch. So as long as I stayed above this trend line, I just held. Now I felt nervous. I'm like, this is going to roll over at any point. Like I thought, okay, 29, it's going to roll over, right? Nope. It's going to roll over. Nope. But I just kept this trend line. I just kept watching this trend line, right? As long as we stayed above this trend line, I wasn't going to worry about it. I was going to let the trade run. And if I was blindly trying to pick the top without that parabolic trend line, I would have probably sold here or here or here, right? I wouldn't have even made it that high. I would have sold those two first yellows. Somewhere in there. I would have sold. Maybe here. But I kept this parabolic trend line on. I got out right here. Now, it's not the top, but I got the sign that we were rolling over. I did sell some at the very tip top, by the way. There was a fib. This was like literally, when you drew on the weekly extension, this was off. This is a 4618 extension right here. So we did get a little bit, but, you know, that was like 5%. But I got 90% out of my Ethereum right here because what happened was we lost that trend line, came back up into it, confirmed it as resistance, and rolled over. So right there at 4K is when I sold, right? All right. So this is a great, like, sweet spot of the move. So we sold our Ethereum at 4K. Now we're watching to get back in Ethereum. What are we waiting on? Exact same thing, right? So I bought some. I did buy some Ethereum already. And then I got it out of it at, you know, same thing, break even. So we launched out of, I don't know if that's the trend line I was watching. Some trend line somewhere I was watching, right? We got to launch out of it right here. So I've already attempted to re-enter, I think on like one of these entries over here, probably this one. I think it was right above 2K. Yeah, probably over here. I already took an entry here, right? We got out, boom, broke this trend line, and then it might have been lower. It doesn't really matter. You get the idea. You know, you're not. It would be insanely tough to catch that bottom wick, these bottom wicks. But what you can do is find these explosions out of these patterns and get an entry pretty close to the bottom, and then ride the sweet spot of the trade. So again, I think I probably tried to enter here, and I ended up getting stopped out at break even. You know, we got a little bounce. I didn't sell any in profit. I was going to let the trade go, and I got stopped out at break even, right? And so now I'm waiting to try again. So I'm getting some entry signals over here on the 4 hour right now, potentially. The problem is I haven't done my work on this yet. I don't know if I like this pattern enough. Yeah, I do. Yeah, I do. It's almost parallel to that one. So, you know, when I get my first 12-hour signal, it's working on it right now, I'll put an entry on. I'll share this, that I only, like, when we're in consolidation like this, trying to come out of consolidation, I typically go ahead and just wait because there's so much overhead resistance. you rarely are just going to get a monster breakout and just run on you. It's going to ping pong around enough to give you some good entries. So over here, I waited on a 12-hour entry, right? Whatever, somewhere in here, I had a 12-hour entry, and that's where I entered. Maybe right there even, right? 2100 or something, and then got stopped out over here as it came back down. I'm going to try the same thing again. This is printing a 12-hour CTM signal for me, right? We have a bit of a pattern. So if I draw the pattern like this, right? You get the idea, right? We have a pattern that we're working on putting in here. Something like that, right? We're coming out of that pattern. Okay, this is going to be a 12-hour CTM signal. So we had a breakout. We're going to retest this 91.29 level or come close enough to it. When we take out either that wick high or I do the closing price often. Not sometimes I just do the closing price. Closing price is more important to me. And because I'm trading the 12-hour, I'm waiting for the closing price to be retaken on the next candle. So I need this candle to be red. I need it to bounce and then retake this closing price, and I'll have an entry there at right around 2,000. But so if Ethereum goes on to run for a bit here, I'll have exited on this rollover over here, and I'll have entered here. I saw people today were lamenting to me, oh man, we had the chance to buy last night at 9,000 on Bitcoin. I'm like, yeah, but if you tried to blindly buy the bottom of Bitcoin, you would have bought at 35,000 and been sitting here for weeks just with, you know, your stomach in knots as it kept selling off on you watching this. You know, for a lot of us, I had funds. I've had a lot of funds ready to buy this whole time, and I'm not stressed about anything because, you know, I've got money on the sidelines and I'm waiting for the signal, the reversal signal, and I'm trying to ride the sweet spot of the trade. I caught from here to hopefully maybe we get the, you know, so this. I should, you know, I didn't short, but I didn't lose anything on the way down here, right? So I think you get the idea. The same is going to be true in Bitcoin on the reverse. If we can capture this breakout of this pattern, and look, this is really a very definitive wedge pattern. Right? And people that poo-poo this all the time, they're flat wrong. This is a good, you know, descending wedge pattern, and we're coming out of it right now. We're working on a signal coming out of this descending wedge as we speak. Another thing, I think it's fair to draw these wedge patterns on the daily closing price as well. And so if you do that, you'll see, a lot of times I will draw my patterns on the daily close. You'll see this is a very defined down, and we're coming out of it right now, right? So we're actually hitting that as a support. So this 12-hour signal is going to coincide well with a break. So we get this 12-hour signal here. This is working on a perfect CTM 12-hour signal out of this down descending wedge pattern. We're going to get a perfect break of that. This level right here, 32.3, happens to be an absolutely astounding level because it is our weekly, hold on, weekly 50-week MA as well. It's like the same exact. So I'm going to put this, so what I'm going to do, guys, I'm going to set my moving average indicator. The indicator time frame is 1 week. So it doesn't matter if I'm looking at a 4-hour chart, a daily chart, or whatever. I'm going to get the weekly 50-week moving average line as I turn this on. Okay, so this is the 50-week moving average. What's awesome about this is the 50-week, you saw it print there and then it kind of went away. The 50-week moving average is actually the exact same price. If I just put it on the weekly, maybe it'll do it. Yeah. It's the exact same price as the weekly close low of this. So we have a perfect level to watch right here. When we retake that 50-week moving average, that's our first sign that we've actually bottomed out. Now, you notice the 120 and the 200 are doing not very friendly looking things. They just crossed. So this is a problem. We'll keep that in mind down the road. With as big of a sell-off as we've had, we're going to get a relief rally. That's the other piece of this. Like, I'm highly convinced that at some point, you know, we're down 55% here. You're going to get a reasonable relief rally. And so that's, regardless of what else happens, that's what I'm going to play. This relief rally should take us back to pretty close to the 120, 200 in the trend. If you look at all these are so close together. This is the most important trend line in crypto. The 120-day SMA and the 200 are all right here. That's going to be the make or break. But that's a good move. That's from 32.3 all the way up to 40. Say by the time we get there, we're down a little bit to 43, 44,000, right? Let's just say it comes in at 43.5. That's a pretty good move, right? If we get a good 12-hour signal here, which we're working on printing right now, and we take some action on that, and we're going to have to be very cautious at this level and at these levels. All in this area right here, you know, it's going to be, if you're swing trading, you're going to need to be very cautious. And even, frankly, if you're position trading, like long-term DCA HODL, if this were to roll over, you know, to each his own. You guys figure out what you want to do, but I'll be watching that very closely to see what happens there. I have a pretty strong feeling that we'll go ahead and break out here. I have another part of my theory. Did I FOMO? No, I haven't FOMO'd in. No, I haven't bought anything yet. I'm already so heavily invested. Like these, basically I'm 70% in, and I've got about 30% of my funds still on the sidelines waiting for my last spot. So I tried this here, and I got stopped out at break even. So if I just wouldn't have put a stop here, I didn't, you know, use proper trading, so I just sort of blindly, yeah, maybe I had a pretty good entry there. I'm going to have to wait for this 12-hour signal. So instead of being in at 34, I'll be in at 32.3. But, you know, at the end of the day, I'm trying to catch, initially I'm trying to catch a move to 44,000. So, you know, whether my entry is 33 or 32.3, this is the right thing to do. I firmly believe I did the right thing. I tried to buy this fib level. It popped right at that fib level. Then it broke down. I got out at break even. I didn't have a good risk-reward opportunity. The risk-reward opportunity was buying coming into that 28.9, 2021 closing open price, and then the 2021 low price at 27,000. Trying to scalp those two levels were the next two good levels to attempt a scalp at. This random level that we stopped and reversed at, there wasn't much there to tell you that was going to be the bottom. So there wasn't a whole lot of point to try it there. So really, I never had the opportunity to try again, and now I just wait. Now I just wait for the charts to unfold. So yeah, I won't FOMO in. I'll take a calculated entry when we form this 12-hour CTM entry signal. As we break the top of that wick, which happens to also coincide with breaking the weekly price and the 50-week moving average all at the same time. So, you know, you look at this 12-hour candle here. I'm going to zoom in on it. That's going to be that to me, not financial advice, Vanderbilt River, that's going to be one heck of an entry. Because, you know, the other thing too, it's part mental. It's just the psychology of all this. If I randomly just try to buy the dip and I'm like, oh, this is great, it's selling. Like I tried to buy the dip, right? Remember, if you guys remember, I tried to buy 38,000. Right? We were just coming screaming down, but 38,000 was the weekly support over here. So I just blindly, that was a good risk reward to me. I was like, I'll try it. I'll try to catch the falling knife here at 38,000. See if we get a good bounce. We ended up breaking down the next day, really bad. But I knew that we were going to get a retest that level, and I waited. So we broke all the way down here, came all the way back up, and then I sold at break even, or pretty close to break even, on that bounce, right? And then I've had funds. But if I would have blindly just bought and held, I'd have sat here the whole time watching this thing ping pong below my cost average. And instead, what I'm doing is I've bought at 32.5, right? I bought some here and some here on these bounces out of here, right? So I've got some in at 32.5. When we closed below this level, I sold some of these. So basically, say half of those two purchases actually went to long-term. They went offline to my offline wallet for a long-term HODL position. And the rest I left online for my trade, right? So my trading accounts got smaller through here because I decided at this time it's better for me to have long-term HODL, you know, allocate more of my funds to my long-term HODL and less of my funds to trading for right now. So that's what I did. But basically whatever was left here in my trading account when we closed below this level at 32.3, I got out. And I was hoping to be able to buy into one of these support levels and get a lower cost average. But ultimately, I'm going to end up buying back pretty close to that same level. But all that said, you know, ultimately, I got out of leverage here, spot here. I tried to buy spot here. When it rejected on us, I got out at pretty much break even. And I've held a lot of funds until here. I bought the dip. Here I bought the dip for long-term HODLs. I got out at maybe a small loss here as we close below, and now I'm going to get back in on this resumption. All in all, because I was very active with all this, and because I didn't just buy the dip here and just hold it, because I went ahead and said, okay, yep, it hit that, it broke down. I knew as soon as we come back into it, it was going to be strong resistance and it was going to go back down, so I sold. and then I bought here and here. My cost average is going to be, I have a lot more net Bitcoin than I would have had if I just blindly bought the dip. This is just a lesson. That's my whole point of this. This is a lesson in we're trying to catch the moves. We're not trying to catch the absolute bottom or top. I never caught the bottom. And yeah, sure, I had 2 buys here, and I'm probably going to end up losing a little bit because I closed here. Because, you know, this could have fallen off a cliff, right? We don't know. This could have gone out 22,000. But I protected my capital. I didn't get a purchase here. Okay, no big deal. I'll get a purchase right back above here. But ultimately, I did a whole lot better because if I wouldn't have done all of this, I would have bought at 38,000. And so, the small loss I took here on buying at 32.5 and selling at 32.3. And then if I buy back in, say I buy back in at 32.4 as we make this signal. Actually, I'll probably be back in by 32.3 again. So that'll be about break. And it's a tiny loss. That loss is way smaller than holding from 38,000 all the way down here, right? And secondarily, the mental health. I've had a very good mental state through all this because I had plenty of funds. I was well protected. I took 2 times my initial investment offline, put it and went and did other things with that money. And so, this is all play money, but then also got out over here, and I didn't have the mental anguish of watching all this. I had funds ready to buy when this line right here broke, and it's breaking right now, finally. And that's my signal to play at least the bounce for now. But you better believe if we come into here and start to roll over, just like here and everywhere else, I'm going to, on my exchange tradable positions, I will sell some. I might take some of my HODL offline. We'll just see what the market sentiment is, what's going on at the time, and I may sell some of my HODL position. I don't know yet. If it only comes to 45 and rolls over, I probably won't sell my HODL position just because, I probably won't. I'll tell you all that. But nonetheless, that's how I'm playing this. So let's go to the comments. Any comments here? I see King Heart. That's the one at the bottom comment for a while. Brandon, you tweeted about not FOMOing. I think the yearly low is 27,736. Thank you. What about the yearly open and yearly low? Yeah, those are well, I think you saw that on my charts, right? Hey, Brandon, are you familiar with Blockstream being connected to Bilderberg and Money Masters? One of the big investors is also 2 board members, Federal Reserve and U.S. Treasury. I saw something the other day. The Rothschild. No, I'm not sure I know about that, honestly. But the Rothschild firm, which obviously it's a completely different Rothschild investment group now, is completely different than like the Rothschilds of old. But the Rothschild investment group, I guess that they call themselves now, has bought in some proxy Bitcoin. I don't remember if they bought MicroStrategies or what it was. Hey Justin, well, I'm glad you're here. Mindy says Bitcoin really doesn't care how much about charts. It broke all the support. It didn't give us refill. It went in a hurry from 20 to 64. If you look at the alts charts, it came down 60-80%. No one saw 30K coming, and everyone's talking 24 and 20K and so on. Yeah, I mean, look, I know people give me flack for doing this stuff. But I'm a firm believer that nobody can predict what's going to happen. And as much as I love a lot of the work people do with the halving models, and I've got my own model, right, and cycles and all stuff, I have no assurance that that's actually going to play out. And neither do you, and nobody does. And so I am not going to blindly trade based on any model. I don't care what it is. And I'm going to consult them, and I'm going to look at them, and I'm going to let that color my bias. And let that shape, where I'm looking. And really, it shapes my focus. What am I focused on? What instruments am I focused on for entries? What instruments am I focused on? What do I think my capital is best used? So, to your comment, nobody knows if it's going to 20. It could go to 20,000. It could go to 24,000. Nobody knows that, right? And so we all have to be ready for that. And I'm ready for that, right? So if it breaks down, I know right now, right? So these HODL, all this stuff I have right here, if we break down below 28,000 and we spend some time down here, I'm going to have to think about selling as we come back into these levels as resistance if we roll over, right? Because something fundamentally is wrong. That's not my base case. That's not what I think is going to happen. But I know my game plan, right? My game plan is if we break down and we go to 20,000 or 14,000, we ping pong around here, I'm going to have to look for some level of resistance and say, okay, you know what? Something's changed, and I'm going to have to sell some on a rollover. At some point, though, you get low enough, it just doesn't make sense to even sell anything, right? I probably wouldn't be interested in selling unless the bounce was back up into the high 20s or 30s. But back to the models. Now here's my model. This is what I think might happen. This is what historically has happened on Bitcoin. The halvings obviously are driving price increase. So the halving creates a supply shock that drives price and a price discovery. I tweeted about this. I'm also a pretty firm believer that I'm not one who thinks that the halving has an effect beyond the first, say, year or maybe even 6 months. But I think it gets priced in at some point. But what happens, and you can see this on-chain, or you can really see this better on on-chain than you can on the charts. But what happens with the halving is about a 3-month window. It does create a supply shock, and it does really start to push price up 3 to maybe 6 months. But that causes price to go into price discovery. And then what happens is price discovery, once you're in price discovery, that's where the halving quickly becomes priced in. But that halving and that supply shock then drove price into price discovery, which drives new interest in the space and drives new people to learn about, why is this thing going up? What's going on with this? And then that new interest is what drives new demand, and that's what drives the second half of the bull market. So I think that's why you have a pretty significant dip in all the models in 2013. 2020, 2017 is a little bit different because it was a slower start because of, if you look at the dollar and the macro monetary conditions, it was a strong dollar, so a weak start to Bitcoin. But it still had some pretty significant dips. I think these dips are the transition of the supply shock of the halving no longer being the primary driver and demand taking over as a driver. So this is that transition period between the supply shock not being in the driver's seat and demand being in the driver's seat. Same thing over here in 2013, right? This was the supply shock. This was the supply shock's now priced in, but now we've got new demand, which then took its time. Then that new demand is what drove the second peak. And I think this is what's going to happen here. What I think is going to happen. I don't know that. But I think that all this big, bubble over here, and this big, liquidity, a lot of liquidity, a lot of people got stopped out. This is all both Fed printer go burr and the supply shock of the halving. I think this is the transition from the halving no longer having that supply shock effect, and now new demand has been generated since right through here. We had a bunch of new people get really interested in Bitcoin as it came up into and took out this level. All that new demand is still in effect. I haven't seen too much of that way. Now, a lot of things we were all hoping for have come to fruition, but nobody saw a sovereign nation adopting Bitcoin as legal tender, did they? I didn't see that happening this year. So that's new demand. And then obviously Tesla and Elon and MicroStrategy was creating new demand over here, right? But nonetheless, that's a lot of new demand, and Kevin O'Leary is getting involved, blah, blah, blah. You get the idea. But the supply shock has done its job, and then the Fed money printer go burr and all the derivatives and leverage available in the system caused this to have a really strong start. And then the transition to the demand side taking over is a pretty rough, transition, but I think it's now starting to take over, and we'll probably start to see demand drive this thing back up. And so that's my thesis about what's going on with these price action, the model. And that's why I think the models work, but it's a dynamic, it's supply and demand and macroeconomics all put together. So, when you look at the nuance of the variations of this, right? And Bitcoin did not start when when people started trading Bitcoin on Mt. Gox. People were trading Bitcoin before Mt. Gox. So I also think Mt. Gox was an event that drove additional demand, kind of like, that what happens after price goes into price discovery, right? It's a demand side shock. Bitcoin actually started over here in 2009. So the price of Bitcoin actually started here. So you look at the length of this price appreciation, with Mt. Gox serving as a similar catalyst as the halving, but it was a demand side catalyst, right? And then the sell-off. So for this length here, the length of this full bull market and bear market was slightly longer than from Bitcoin's inception to its first bad sell-off. So from the low, from Bitcoin's inception to this low, from this low to this low, this was slightly longer. From this low to this low, this was slightly longer, and it looks like now from this low to the next true low might be slightly longer yet. Okay, so but I think people are way too focused on, and no matter where I look in the space, I see people that are focused on just the price action. I see people that are focused on, okay, from the time Bitcoin started trading on Mt. Gox, we had this very short burst in price. They call that the first cycle, and then it took a little bit longer for price, and then a little bit longer for price, and that means we're having these lengthening cycles. But they're not looking at the totality of the picture. The totality is Bitcoin started over here. They're also not looking at macroeconomics that affect things, and they're not really considering even the supply shock. They're just looking at this very, very narrow view of this short window here and building an entire thesis on that. So, I think a lot of people are missing a lot with these models to begin with. It's supply and demand and macroeconomics. So you look at the relationship here, it's undeniable that when the dollar's weak, Bitcoin tends to have stronger pops. And when dollar is strong, Bitcoin tends to at least go sideways. Strong dollar. After the halving, Bitcoin's still very weak, and then when the dollar weakens, all of a sudden Bitcoin gets real strong, right? And then you have this in weak dollar, strong Bitcoin top. Now you have the situation where there was a fairly strong dollar, Bitcoin's going sideways, dollar got real weak, Bitcoin went choo, dollar starts to find a bottom, Bitcoin starts to roll over. So there's multiple factors at play. You got the supply shock of the halving, you've got new demand that enters the space on when Bitcoin enters price discovery, and you have the macroeconomic winds, tailwinds or headwinds as speculative assets or risk the environment's risk on or risk off. So all that said, I do think that we're entering a period. The dollar probably is going to make a little bit of some noise here and then roll over again. That's probably what's going to happen with the dollar. That's going to give Bitcoin a little bit of tailwind. I also think, again, we're now, the halving has done its job. The weak dollar has also done its job. Now I think now we're transitioning from supply shock to new demand driving the asset. Lastly, I'll leave you all at this point, and then I'm going to wrap up. The last thing I want to say is the start of this cycle shocked everybody. Nobody thought Bitcoin was going to break out straight from 10,000 to basically 65,000 as fast as it did. Nobody thought that. There's nobody who could have predicted that fast. I think the start of this cycle is going to shock people. I think the end of the cycle is going to shock people, but not in a good way. I think it's actually going to, my opinion is, because of how strong the first price action was and how many people got burned, the peak is probably going to disappoint. It's going to disappoint, I think, people more so looking for like a $400,000 or $500,000 peak. I think those of us who are fine with living with a 100 to 160 peak are going to be, I would imagine that we would peak out somewhere at, I would be pretty happy with 120 myself. They could definitely overshoot that, and so we could be surprised. But I do think that the peak is probably going to be a little bit less. But I do think we're going to have that return to the bull market because of multiple factors. Again, I think the dollar is going to have to roll over probably a little bit more here. And it may not, though. I mean, that's the thing, is if the dollar does break out of this pattern, use a W pattern put in, right? If the dollar does break out, this could also really dampen the conclusion of this bull market. I still do think it at least gets back to 65,000 and breaks that for a little bit, but we'll see. That's all my opinion. Not financial advice. Banned by the river. Anything you hear here, not financial advice. I start with that. If you listen to anything I say, you're going to end up, if you blindly take trades based on anything you heard or saw here, you're going to end up losing all your money living in a van by the river. What is Bitcoin doing right now for go to bed? I think it looks like it's starting to pick up some steam here a little bit. But I hope that explains. I know on Twitter, I get so much weird feedback from people, and the most of the feedback I get is people like, "Oh, you're," basically they'll include Jordan in my tweets, Jordan Lindsey, and say, "Oh, he didn't Brandon even agree with you. You're dead wrong, Jordan." I'm like, no, I'm not disagreeing. It's I'm just looking at both sides. I'm just constantly keeping an eye on both sides of things, and I'm making sure that myself and anybody who I'm working with is well positioned for whatever might happen, because we just don't know. There are no promises. There are no certainties in this. This is all probabilities. We are all playing the probabilities. Is all we're doing. All right, everybody. Let me see if I have any. I'll see if we have any questions here. I've been live for longer than I probably wanted to be, but I think with we are at a critical juncture right now. It looks to me like Bitcoin is trying to finally reverse and give us at least a relief rally. Let's just start with that. Let's not get over our head. Let's not get over zealous about what's going to happen in Moon Boy, $200,000 tomorrow, right? It's got a lot of resistance overhead. And if we get some unexpected bullish news, it could slam through that resistance real fast. I mean, it is Bitcoin, and it is, the year and a half or 2 years after the halving, it kind of breaks all the rules anyway. So unexpected bullish news could really cause it to slam. But what was even the question? I don't even know. I'm going off on another tangent here. It helps. I will take 160K any day. But what causes the bear market in your theory? Exhaustion? Yeah, I mean, it's simply that, right? So here, think about it. Having supply shock. Everybody understands the supply shock, right? Supply shock. What happened with lumber? Look what happened with lumber. Lumber spiked and came crashing down, right? You get a supply shock. You get very strong price appreciation. In the case of Bitcoin, this is such a new nascent asset that there's a lot of market pricing that has to go in. Unlike, there are some people out there that are very good traders that think that this efficient market hypothesis that all price is perfect and everything's priced. That's a bunch of load of nonsense. That is so not true. If all market participants had all knowledge and all market participants, so that everybody who was participating in the market knew everything about the market and about what was going on with the market, and they acted like robots and were not emotional humans, then yes, the market would be efficient. Those two things are very not true. Anyway, what happens is when you get into that dynamic of the demand side, when demand is driving an asset, that's where you get bubbles. That's where you get blow off tops. And I guess with the supply side too, supply shock kind of can, but the demand side can really drive some crazy blow off tops. And so when you get that, kind of flurry of demand and that kind of FOMO kicking in, and you got multiple entities. And things just people are buying in constantly, and nobody's really selling. You get those. That's how you get blow off tops. And so, what causes the bear market is it's a simple supply and demand dynamic. At some point, the new demand that was generated by the interest that was brought into the space becomes overdone, and yes, you have a buyer exhaustion. You have too much. Things go up too much too fast. Somebody's gonna Again, when we go, if we go up to $100,000, people who are holding one full Bitcoin, they're gonna go. I can go buy me, at 120. I can buy my Lambo with one Bitcoin. I'm gonna go buy a used Lambo today. Now I'm gonna do my Lambo. I got my one Bitcoin. I'm gonna turn that in for a Lambo right now. I'm gonna do it. At some point, the gains are holding on to, and you have enough of those people doing that, obviously, then the market turns around, because you have a flood of supply and demand is dropping, right? People aren't buying anymore, they're not selling. So when you have that inversion happen, especially after a big blow off top, then you have a lot of sellers, the crowded exit, so forth and so on. The fundamentals probably don't change. You probably have a lot of the same demand drivers that were generated. You're going to maintain most of those demand drivers. You're going to lose some of that new demand, though, because when it rolls over like that, people kind of leave the space. But then programmable money, fortunately, you have the next supply shock and having... But all through the bear market, if I were to characterize it this way, we didn't even talk about Bitcoin dominance tonight, which I want to get into alts. We need to start looking at alts here pretty soon. But if I characterize it this way, the demand, I think a lot of people think that Bitcoin demand is this like linear a growth curve. It's not. It's probably more of an exponential growth curve, first of all, but it's not a smooth line either, right? So Bitcoin, this is Bitcoin adoption. It's going to look something like this until it reaches, it's going to eventually bell curve, right? So you're going to have the big explosion in adoption and then the long tail. But we're, like if I draw this out here, we're like here on the adoption curve, somewhere over here. But if you really, really zoom in, the adoption curve looks more like this. Like anything else, it's just zigzagging its way up. And so when you have that bubble, you have this natural peak in the adoption curve, and then when things get overheated and oversold, then you do have a decline in adoption for a short period of time. And then eventually, even through the bear market, this is still, you're still generating new adoption compared to the average over here, right? The mean adoption rate over here and over here is higher, right? So it does stagger its way up. The mean adoption rate will continue to stagger its way up, but you do have peaks and valleys of that. So the people who were interested in being involved in the space that now lose interest does drive adoption rate down. So not only do you have an overbought situation, but you have people leaving, and you have a very short-term drop in new demand. So not only do you have, so that creates a very large prolonged sell-off until the forces, you know, in the case Bitcoin probably looks more like the has going along. The halving creates a huge, you know, spike in whatever. You get the idea. But that's just, yeah, it's not even my thought. I mean, that's absolutely what happens. It's just how it works. How markets work. Let me get rid of this. All right, guys. Lost traders drive the price up and then have to pay taxes on gains eventually. Yeah, unless you take those profits, those capital gains and or nominal income tax profits from your trading activities, and you reinvest that into other business ventures, and you operate those businesses at a loss for a period of time. And then you know, the first year you're that new business and you have a lot of losses. Those are all write-offs that offset your income on the other side. And then maybe you can generate a positive revenue the year after and normalize things and buy a bunch of assets in the name of your business. Anyway, this is how the rich people avoid taxes. So if you're making a bunch of money trading and you're paying all of that in taxes, you're doing it wrong. So Pat John, I appreciate your input. It's good to have more than one person's perspective. I still like the Fourier cycle theory, but we'll see in a few months if it holds. Yeah, we'll see. I like Willy Woo's theory on the price peak. He thinks it has to do with paying estimated taxes on trading. The depression price can now be, people bought 64K lost harvesting. Yeah, that might, I mean, legitimately, if your business is investing and you're constantly managing, if you have the ability to offset, you know, realize gains with losses elsewhere, the way they do it carefully, right? So what they do is they realize losses on a short term and they buy the asset right back and then hold that asset for more than a year and get capital gains on it. But if they bought it at 65,000 and they sold it, but they made money on something else, they made a lot of money on other things that they had to realize either short-term gains or capital gains tax on, and they then want to offset those gains. Well, if they bought Bitcoin at 65,000 and they had planned to hold it for a couple of years, what they can do now is if they've made money elsewhere, they want to shelter those taxes. You're right. They can then go sell the asset, you know, Bitcoin at 30 whatever thousand, and immediately buy it back. But that's a realized loss. So what you bought at 64, so it's you're net flat on the position. It does reset your clock on getting capital gains tax, but for a lot of these big players, they're going to hold it. You know, they'll manage that, right? So in this case, it's better for them to go ahead and take a short-term loss and reset the clock and be able to offset gains elsewhere, and then just have Bitcoin fresh in the ledger and then manage that down the road, than to not offset their losses, right? So it's a calculated risk limit. So that's a valid point. That makes sense. Sure. I read the wash sales rules don't apply to Bitcoin in the U.S. Okay, yeah, and there's some wash sales. Don't buy tax loss harvesting if you think an asset's price will rise. You don't sell for tax reasons. You sell losers that will not appreciate. That's kind of true, but if you do it, right? You know, if you're dealing with assets that don't have the wash sale rule, you can get around some things. But anyway, that's a tax discussion. I'm not a tax person. Not financial advice, not tax advice. The way I do it is I have side businesses, I have multiple income streams, and I will fund the expansion of certain business entities with other proceeds and operate that business at a loss and or at a lower income rate, which offsets my taxes. And then, you know, I have assets that are owned by the business, and I try to normalize my taxes. So some years, obviously with trading, crypto especially, you have really big years, and then some years you have just kind of boring years, right? And so then on the boring years, you can sell some of the assets you'd maybe acquired, or you can realize revenue from the side businesses you have, so forth and so on, and it all averages out that way. Pastor Josh is trying to save for a van down by the river. So we all are. Hopefully our Bitcoins all bounce back enough that we can at least afford an RV by a nice river and not like living in a depressing van with a trash can under a bridge by the river, under the bridge. For any Australian watchers, wash sale rules absolutely do apply for crypto. Yeah, so yeah, tax laws are different everywhere. I was just explaining the general. This is some, you know, investment firms, they work these tax loss harvesting when there's an opportunity to do so. If they bought something higher and they have the ability to offset gains elsewhere, whatever, they do this stuff all the time. But I'm not a tax person, and taxes are different everywhere. So I'm in the van part next to you. All right, everybody, we've been going way too long tonight, but I thank you all for staying on this long. It's very nice to have a nice crowd. I hope I got some things out there that people have probably been. I post on Twitter as a 140 character limit. I know I post things on that either confuse people, that don't see whatever. Like I'm just sharing my observations about things. 9 times out of 10, I'll share a chart. I'll share, you know, I'm not taking trades a lot of times. I'm just sharing like, okay, look, the chart, the price action might do this or might do that, or this is what I'm seeing. This is a pattern. This is. I didn't mean I'm taking trades on this stuff. Doesn't mean anything. It just means I'm just sharing my observations. And sometimes I'll put out there, you know, I think that this part of this, you know, my opinion of the cycle is broken or whatever, right? And that's my model. What I had in my mind is going to have to change. It's like the other day I said, oh, I think the 4-year cycle is broken. And I thought the 4-year part of the cycle has been broken for. I think that we're going to have a small lengthening, right? I think we're going to have like a 10 to 20% lengthening cycle on cycle potentially. So I've always thought the 4-year part of the cycle, the metronome time, like the time lining up from bull to bear, wasn't going to line up exactly. It was going to maybe be slightly stretched or something to that effect. And so for me, this prolonged sell-off was more just confirmation that if we get a recovery, either this market cycle is going to be shorter and surprise all of us, and it's going to change everything, or it's going to take a while to recover, and then this is going to push the timelines out a little bit further, and thus the same thing. The whole halving, I believe the halving supply shock still is in effect, and until it becomes priced in, which one of these days, enough market participants are going to be aware of what the halving is going to do, and heading into the halving, before the halving happens, you'll see price appreciate, you know, somewhat as the market is anticipating that. And then you'll know it's pretty much priced in if you get a big price rise 3 to 6 months ahead of the halving. That's our clue that, hey, the halving has been priced in. Now let's see what happens from there. All right, guys, I'm going to wrap up. Hey, Brandon, do you mind explaining a little more in detail how you enter a trade using 12-hour CTM entry? Yeah, when you get a retest of a support level, that 12-hour bar, when price breaks back above that 12-hour bar that you're in, then you have an entry. I'll just show you. So we're printing, you know, over here. Let's find one. All right, so we broke out over here. We broke out above. Make it easy. So say this was my support level. I'm going to cheat and just pull a support level down right here. I'm sure there's some level we were watching here. And then it looks like a pretty good level, right? You get resistance. Okay. So we broke above here, came back to test. This is my test wick. It actually hit the support level. So this wick right here is my test wick. When price goes above that price of that test wick, that's my entry. My entry is there. My stop loss is below that wick, roughly. And then boom, that's your entry. That would have been a great entry, right? And that actually wasn't it. I actually did take that entry for a trade. All right, everybody, good night. Y'all have take care. I'm going to throw on some Doge-wave and get out of here.